What's up guys, Bulls and the Bears here, and in today's video I'm going to be showing you my scanner for the wheel strategy. How do I find the stocks that I trade the wheel on? I do have a scanner. It's here with Webull, and this is free. You might have to create an account, but you don't have to fund it. As you can see on the far right, it says please open account. So I don't even actually have one. I used to have one, but when I transferred my assets over to Robinhood, it actually closed out my Webull account, but yet I'm still able to use this. I'm still able to look at charts, news feeds, and use the scanner, so you guys should be able to as well, even if this isn't your broker. You just want to go on Webull's website right here and just click Web Trade at the top. Web Trade will bring you into their web-based platform, and you can paper trade in it as well, but here's the scanner. And on the far left, you'll see what looks like a magnifying glass with a little stock symbol. See if I can bring it in over here. No. Too far down. But yeah, on the far left is you'll see scanner, and then that'll bring you here, and then you can create your own. You can create your own scanner or screener, whatever the hell you want to call it. So here's my wheel strategy scanner. Now this is not the be all end all. I do keep my ears open, my eyes and ears open. I watch CNBC a lot. They talk about all these stocks, and sometimes I look at them and sometimes I'm like, oh, I want to play that one. Or sometimes I'll just read an article or be on Twitter and find names that way. So it's not only this that I look at, but this at least helps me look in the right direction. This is also far from perfect. There's actually a few flaws in this that I don't like. So it's, again, not the be all end all. And I will go over the issues I have, but it points me in a general direction and gets me looking. You know, it's a good starting point. So let's take a look at my criteria. So if I go to the scanner name over here, click modify, you will see all the filters I have. Okay. So it's not a lot because this platform doesn't offer a ton. And again, if you have any type of scanner that you like, please let me know in the comments down below. I'm not trying to pay for anything, but I'd still be curious to see what you guys use. But this is what I start with at least. So the filters I have. Market cap is the first one. I want to make sure the company that I trade is of decent size. I don't want any type of micro company that could go belly up in an instant. Not that bigger companies can't, but I want somewhat of an established company, and generally a higher market cap means a better established company. So a minimum of $1 billion in market cap, and anything above that is fine. I don't want a small micro cap company. I like a nice mid cap, small cap, preferably large cap, which is above 10 billion. So that's what I look for, but that's up to you guys. Last price is also completely up to you guys. That's another filter. To me, it's based on how much money I have in my account and how much I want to allocate per position. For me, $5,000 per position is where I keep my cap. So that's 100 shares at $50. So a $50 stock is really the highest I'll go, because that would be $5,000. So that's up to you. However you want to do it. If you want to go all in one stock, that's different. If you want to have up to five positions in your portfolio, that's going to change the price that you look at. So this is what works for me. I have a minimum of $5. I don't want a penny stock. So I put a minimum of $5 and a max of 55. Why a max of 55 and not 50? Well, that's because we sell puts out of the money. So a stock could be at 55 bucks, but I might be able to sell a put at 50, so which is out of the money. So that's why I give it a little bit of a buffer on the top end, so I can see if there are stocks above 50 that I can sell a put at 50. So that explains that. Volume is the other thing, and this is where Webull annoys me a little bit. So I want a stock that has an average volume of over 1 million shares. I want to make sure there's some activity on these stocks and that they're not thinly traded and have big, wide bid-ask spreads and janky option chains. I don't want any of that. I just want a nice stock that has volume. And basically, I'm talking about average volume. What's the average volume on the stock over the course of 3 months or so? And Webull does have a column for that right here. Average volume, 3 months. Great. That's what I'm looking for. But the filter looks at current volume on the day. So it's annoying because if you open the screener first thing in the morning, you're only going to get like a handful of names because not every stock has reached 1 million shares of volume yet, first minute of the day. So that's a flaw. So it only looks at current volume, which means you might need to wait later in the day to actually use this screener, because you got to wait for those stocks to actually reach 1 million shares of volume for the day. EPS is the next one, earnings per share. I want a positive number. A positive EPS means they have positive earnings. That means they're making money. That's what I want. I don't want a company that operates at a loss. I understand there's a lot of high growth tech companies that don't have positive earnings. They operate at a loss because they're constantly reinvesting in themselves and just R&D and stuff, and not actually operating at a profit. That happens a lot, and you can make good returns on those kinds of companies. But for me, in the wheel strategy and holding on to positions, I want to be able to sleep easy at night, and knowing that a company operates at a profit, that helps me sleep at night. Because if there's an event where my trade or my stock goes far against me and I have to hold it for 6 months, 12 months, I want to make sure that they're in good standing. If a stock goes well against me, down 30%, and I'm deep underwater and they're not even making money, I'm going to have all these bad thoughts go through my head. Like, oh my God, they're not even profitable. The stock's down 40%. They're going to go bankrupt. They're not making money. So who's to say they won't go bankrupt? I don't want that going through my head. I want to be able to sleep easy in an uncomfortable trade. And if they're making money, that gives me the confidence that the stock will bounce back eventually. The company's obviously doing something right. Let's just stick with it. And then the last thing is debt to assets. 0 to 70% is my range. How much debt do they have relative to their total assets? I don't want anything over 70%. I don't want a company that's completely saddled with debt. In today's high interest rate environment, debt is expensive, and that's going to eat at their bottom line if they have to keep funding this debt and having high interest expenses. Don't really want that. I want a company that can be flexible in the event that they need to be. So 70% debt to asset is my cap, and that's really about it. Now, Webull, like I said, with the volume problem, it's not perfect. Like EPS, I just told you, I want a positive EPS. That's my filter. But as you can see here, like these first 4 of the first 5 names have a negative EPS under the EPS column. So what's up with that? I don't know. It's just is what it is. That's why I don't only look at this and then trade off of it. I might look at some names here, and if I find one that I like, I do further due diligence to confirm everything about it, make sure all my criteria is met. So first thing I do when I run the scanner, which is already ran right here. Looks like 256 names came up. Oh, it's going to run again. Hold on a second. Okay. First thing I do is I sort by change on the day. I want to see the biggest losers. Which stocks are down the most out of all of these? Because I want to sell puts on red days. Because when a stock is selling off 10% and then you sell a put 2% beyond that, that means the stock would have to fall at over like 12, 13% on the week for you to get a sign on your put. It's more likely that the stock will probably bounce or go sideways after a 10% drop and your put will expire worthless, right? The stock's selling off, it's already at a discount and you're trying to buy it at an even further discount. That's just the right way to play it. And selling calls on green days is equally as preferred. There's usually a lot of volatility also that comes into the premiums with a big down day, so that could also help you with selling premium and stuff. So it's just better to do it this way. So I take a look at the names that are down, and then I look to see what's interesting. U.S. Steel is down over 12%. That's interesting. I'll have to take a look at that. I see Foot Locker is down almost 5%. So let's just try Foot Locker. That's a name that we're all familiar with. Let's do some due diligence on it. So I'll take a look at Foot Locker. And then what I'll do is I'll go into TradingView to actually do a little bit of further due diligence. And here's TradingView here. I already have Foot Locker on the screen because I was prepared. This is a free platform as well. You've got to sign up with an email, but it's completely free. It gives you a lot of cool stuff that you can do, including news feeds and tons of chart tools and watch lists and key metrics, financial data, everything really. So this is what I use. So we'll take a look at the chart momentarily, but let's take a look at all those metrics that I'm looking for. Right here on the right, you can see a bunch of stuff. Market cap is $2 billion. Dividend yield is 6.5%, so they pay a dividend. That's good. It's not a requirement, but it's a bonus. PE ratio doesn't have one. That's interesting. Maybe it doesn't make money. That could be why. If they don't have earnings, then there might not be a price to earnings ratio. So we're going to take a look at that. That's concerning. Scrolling down here, I look at the analyst rating. So under analyst rating, I like to click see forecast. This will bring me the analyst opinions as well as EPS and revenue. So it's a nice one-stop shop for a quick overview. Right now, the analysts say mostly say hold. Out of 19 ratings, 12 say hold. 5 say strong sell. That's not good. And only 2 say strong buy. So there are a couple that are willing to buy it, but most are holding and saying sell. So that's not encouraging. But it doesn't mean we're going to listen to them completely, but it's just not encouraging. EPS is positive. That's good. But as we saw, the PE ratio was blank, so they might have negative net income. We'll have to double check that. Revenue's all right. It's not necessarily growing too much. EPS is obviously declining quarter over quarter, so that's not a good sign, although it is positive, which is what I want to see. But let's take a further look into their earnings. So again, on the right, there's an income statement, financial section. I'm going to click more financials. And I'm going to go to, there's a bunch of options at the top that you can look through. I'm going to go to statements, and this will give me a breakdown. Total revenue, gross profit, operating income, pre-tax income, and then net income. So it does look like on this quarter, net income was negative $389 million. So they actually lost money. Why was EPS positive? Why was earnings per share positive if they operated at a loss? That could be due to adjusted earnings. There's 2 different types of EPS. There's adjusted EPS and GAAP EPS. Adjusted EPS strips out any one-time, one-off, outlier transactions or costs or fees or whatever that might reduce their net income. If it's just an outlierish thing like a charge or a lawsuit litigation thing, they might strip that out of their adjusted EPS and say it's positive, where if you factor that one outlier thing in, it's actually negative. So that could be why net income is below 0 while EPS is above 0. So that's not a good look. I don't like that net income is negative, so I'm already kind of off this thing, but we'll keep looking. We'll go to statistics. This will show me the debt to assets, which should be good because it was in the screener. Look at the solvency ratios on the bottom. Debt to asset ratio looks like it's 0.43, so only 43%, or I should say the debt that they have is only 43% the size of their total assets. So that's pretty good. That means I'm not worried about their debt. I'm just worried about their profitability. They weren't profitable this past quarter. That's concerning. And it seems like net income is just dwindling quarter over quarter. It's not the greatest look. So fundamentally, not a big fan. I haven't even looked at the technicals yet because fundamentals are very important with the wheel strategy. If you're holding something for a month or longer, you got to factor in some of the fundamentals. So that's what we just did here. Not the greatest. We'll look at the chart. Clearly there's got to be some support around here in the $20 range, So chart-wise, not really that bad. Not that bad. I mean, if I'm going to look to buy Foot Locker, it would be around $20 because this is where it tends to bounce. Even way over here, it bottomed out in 2011. Then in 2020, the COVID drop. Last year, same thing. So around, $17, $18 is where it seems to bottom out. And we're getting pretty close to that. So the chart is actually pretty decent. It's getting close to the range that I'd like to play. However, the fundamentals, the negative net income, not a fan. Not a fan. And just the space too. I mean, retail in general, whether it be Nike or Target, there's a lot of weakness out there. Theft issues, consumers pulling back on their spending. It's not the greatest space as well, so something to consider, but that's kind of how it would go. That's the process. I use Webull to screen some names. If I find one, I go into TradingView and do some further due diligence, look at the chart as well, and do my analysis that way. And Foot Locker kind of has the chart, has the market cap, has the dividend yield, has the debt to asset ratio, has the price, everything, but it's not profitable. So it just reported a loss. And even the analyst ratings too, not encouraging. A lot of them say strong sell. No one's really saying buy it. So not a candidate. Not a candidate. But that's just something I would look at and when I do my due diligence on names. So that's it, guys. That's the full process of me trying to determine whether or not I want to choose or trade the wheel on something. I start with Webull's screener. It's not the best. I will take recommendations in the comments if you have any. But it's a good starting point, and I sort for the biggest losers, and then I do further due diligence after that in TradingView. Look at the financials, look at the ratios, look at the chart, all that good stuff. And of course, the options chain. Forgot to say that. The options chain needs to, for me personally, needs to pay enough premium. But I also like to play weeklies. If a stock doesn't have a weekly options chain, and it's only monthlies, then it's completely out. No, I don't care what the metrics are, what the chart looks like. If I can't do weekly trades on the options, then I'm not playing it. Plain and simple. And there's no filter on that as well. So a lot of these names in here might simply be null and void solely because of the options chain. But I can't filter that out. So I just got to figure it out myself. Another flaw that not much I can do about. But that's it, guys. That's my wheel strategy screener. Not the craziest, but it's a good starting point. So if you enjoyed, hit the like button, subscribe for more content. I'll see you all next time.